Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, episode very important. It is after the inauguration, so we're into 2025. The new administration is in place, so let's see what happens there. Stay tuned. We'll talk a little bit more about that. Now, we're going to talk about a company today that is highly connected to the administration. At least one person is, maybe not the company. But the company is Tesla, and their CEO is Elon Musk, who's been very prominent in this new administration. So let's dive in to the company. So as you may know, what we're going to talk about is the framework from the GW Investment Institute. So that is business, management, price valuation, and balance sheet. So if you're not caught up on that, I encourage you to watch other episodes too if you want to learn about companies. But that's the framework that we use at the GW Investment Institute, and our students have been very successful with this framework. We took that framework from Warren Buffett and we modified it a little bit. We added the balance sheet. We emphasized things a little bit differently, let's say. But the same framework is there for anyone to use, and courtesy of Mr. Buffett, generally speaking, and modified by the Investment Institute. So let's jump in. So Tesla, everyone thinks, maybe not everyone, many people think that this is a car company. I would offer that it's not a car company, that this is a technology company, that this is a hardware and software business. And because it's very different from other car companies, you wouldn't say that they're direct competitors with GM. GM does not build really their own software. Ford doesn't really build their own software. But from the inception of Tesla, really these people are hardware people, they're software people, they're integration people. So it's a very different setup. And obviously, we're going to talk about some of their different products too. But in the car business, they've gotten very popular. Now, one of the things that just came out is that Trump is mentioning that they're going to get rid of this mandate for electric vehicles. So we'll see what the impact is there. That time will tell on that. But let's talk about a couple of the things that Tesla does. So on the business side, the most well-known feature are the vehicles, and really that's what drives most of the sales right now. Some of the other things that are happening at Tesla that are very important, you have the megapacks in the solar business. And so the megapacks are utility scale batteries that help harmonize the grid. And so when you're adding all these renewables, intermittent sources on the grid, you really need to have these battery backups. That business is growing leaps and bounds, hundreds of percents per year. And so it is really important for us to watch that. Now, it is a smaller part of the business overall, but it is growing much faster than the car business. And so let's just really now dive into some of the metrics. And so when we talk about market cap, right now, again, after the administration has taken over, in January here, we're looking at the market cap of 1.3 trillion for Tesla on revenue of 97 billion. And so when we see that, those are big numbers. And so if you look at gross profit, you're talking 18%, which is pretty good for a car company. And if you're looking at for a manufacturing business, not bad at all. So let's look a little bit further. Let's look at the net income margins, 7.5%. Now that seems more like, okay, this is a manufacturing business. And so, but really the scale that they're getting is enormous. And when you really think about sort of the upside that they have in a few different areas, I think that's why it's important to really pay attention to Tesla. So one of the most important areas to watch that I think, I'm saying it, but opinion, is the full self-driving. So if you're out there and you have version 13.2.2 and something else, then you're sort of have the newest version out there. And depending on what type of hardware came with your car, whether it's hardware 3 or hardware 4, about to switch to, they call it AI 4 and AI 5 coming out. That's the cameras and the setup that enables this, plus the software. And this has become very significant because this can be an enormous driver for the usability of the cars. And so it can make a car going from, let's say, used 1/10 of the time, it sits idle 9/10 of the time, to having a car, you put it on the Tesla network and it drives itself around, it picks up people. And so it goes from a depreciating asset to a cash flow asset for the person who owns that car and owns the software and owns the rights to that. That is a very significant change and a very big lift in value. And also, even if you don't consider that, if you just say, well, I'm not going to rent it out, but it drives me around, you basically have a driver now. So if you own that, you effectively have a driver. So you get to maybe get some of your time back. And depending on how fast that rolls out, as far as how fully autonomous that might be, that's something that could be useful, even if you're not using that time for other people or using your car to have other people use it. It's the time it saves you for that. So that's really significant. But if you put it on the network, again, goes from depreciating asset to cash flow asset. So important piece to watch. Plus, they have the fully autonomous cars. That's the two-seater that was showcased at the end of last year. That's going to pick people up, basically an Uber with no driver in it, 2 seats, you jump in, something like 80+% of the rides are 1 or 2 people. So I think it makes a lot of sense to target a market for a 2-seater, right? Plus luggage, going to the airport, it's just 2 people, it's just you. Many times you take an Uber, you take a cab, if you still take some of those things, it's you by yourself, right? I'm going to the airport, my luggage is in there. So a 2-seater works fantastic for probably 80+% of the rides. Next up, they have a bigger transport thing there. I think that's probably a little bit further out, but it's 20+ people we'll see there. So I think that's important. The other piece is that they're really growing the compute faster than likely almost anyone else on Earth as far as it relates to this product. And so they built a big center in Austin, Texas. They moved the headquarters from California to Texas. Now they have a big compute center in Texas there, right on the campus, for the full self-driving capabilities. And so I think, again, this is something as an analyst, as an investor, you really need to watch. And if you look at sort of the progress that's being made, and what has happened to Tesla over the past year, it's grown quite significantly, up basically 100% year over year. Now, let's, when we're talking about the business, those are things that we really need to pay attention to. And there's significant growth drivers. And I'll mention one more thing before we move on. And we could really talk at length about a lot of these different segments. But to keep the episode tight, we're going to talk just about one more, and then we're going to move on to the other parts of the framework we'll revisit when we wrap up here. But the next piece that is worth mentioning, and you should be paying close attention to, is Optimus. This is the fully autonomous robot that they're trying to build. Now, I think everyone would have one of these robots. If they get this to work, and they can get it at a price point, let's say $30,000, I think everyone's going to have an Optimus robot because, if it can load the dishwasher for you, clean your house, basically have everything done when you get home, your house is clean, your dishes are washed, your clothes are washed and folded, your beds are made, all the stuff that maybe it seemed quite mundane, but you would, be happy to pay someone to do. And let's say you finance it, it's $1,000 a month, you get it down to $500 a month. I think, at $1,000 a month, many people are going to have that at $500 a month and $250, a month. Almost everyone's going to have that, right? And I think depending where the price point goes, I think everyone would buy that product. So then gets kind of crazy on the numbers for the market cap associated with, that total addressable market is, everybody on the planet effectively. And so we'll have to pay close attention to that. I think that's more upside from here. It's something to pay attention to, but certainly the car business is going strong. The energy business is growing faster than the other parts, and the utility business is way bigger than the car business. And so I think that's something to clearly pay attention to. So that for the business, we'll leave it there for the moment. And again, we could spend an enormous amount of time on any one of those segments, and we could really deep dive to talk about sort of the growth trajectory, where they are now, the capabilities, at length. But moving on to management. So I think we just focus on Musk as the CEO here. And obviously there are other great people involved that we could talk about. But Musk is the leader of this. He remains as a 12% owner of the business. And so highly motivated, founder of the business, founder-led businesses, have been successful. You think about Apple in its heyday and its rise to prominence when Steve Jobs came back. You think about a company like Oracle right now. You think about Berkshire Hathaway, even though Buffett wasn't technically a founder, but sort of the founder of the modern version of Berkshire Hathaway. But these founder-led companies, they can do well. And probably the most prominent founder-led company besides Tesla right now would be NVIDIA and Jensen Huang. And so these founder-led companies have been successful. And because these people are passionate, obviously they're super wealthy already. So at some point, it's not about the money. It's about their vision, what they want to do. And if you're, as an investor, can tag along for that ride, that is wonderful. And I think as far as alignment of interest, which Charlie Munger talks about all the time, fully aligned as a shareholder with Musk as far as like what he wants to do with the company, if you believe in their vision. Now, many investors, think differently sometimes. And many times, a lot of the investors are right in lockstep with Musk. And so that's obviously up to you as an analyst to figure out, if you think you're aligned with the founder in this case and the CEO. I think many people are. And I think, there's a high probability sometimes, or maybe it's not a high probability. There can be a good and maybe better than a 50-50 probability when you have this founder-led, that they're really focused on the vision, and it's not just about the money. He has a huge stake in the company as well. So his personal fortune is already immense. And so really he's trying to drive this company forward. And so interests still seem to align with growing the business and moving it forward. And he's been a very capable CEO. Now, some of the criticism that Musk can get is that, he likes to spend time on what was Twitter, now X, since he bought that as well. And he has many interests, right? He's running different companies. And so some of the criticism could be that he's spending too much time at SpaceX, or he's spending too much time at X, or he's spending too much at X.AI, whatever the case may be. He has a variety of companies that he is working with, and he has founded, and he is leading. And this can be very challenging as an investor to sit back and think, how do I think about this? Because this is not really like anyone else. So he definitely is in a class by himself as far as this ability and willingness to run so many companies at the same time. So that, is something that you have to uniquely evaluate. And it's not going to be comparable really to any other setup. You really, as an analyst, need to think about, on the management side, am I comfortable with this person running so many things? Well, right now, it looks like the results, speak for themselves. And a lot of these companies have achieved a lot of really great success. And now you can add on to this a government job, which I don't think he's getting paid for, as far as I can understand, is the co-head of DOGE, the Department of Government Efficiency. So he now has a government job, trying to help the government be more efficient as well, added on to all these other things. So you could absolutely say, well, I think this person has too many things going, and that can be a valid sort of analysis that you would say, well, most people really can't, manage all these things at the same time. But I do think you have to say this is a special and unique skill set that Musk has clearly developed and seems to be good at. And I think you have to do this sort of as a one-off analysis and not really compare it to others. But you have to hold him accountable for the results of these companies. But it seems like many of these companies are pushing ahead and pushing forward. Now, so I think, when we talk about management, I think we're solidly aligned there. And again, each analyst will need to do their own work on that. Next up here is on the price valuation. Now, this is where, a lot of people get really skittish because, the valuation, the forward PE is 171 times. So, when you're talking a year ago, when the price is half of that, you're still talking about a pretty generous PE if you just chop that in half. But now you're talking about a PE that is really, really expecting a lot of growth. So some of that full self-driving expectation is in there. Maybe even some of the optimists is in there at 171 times. Now, this valuation is challenging because the company does need to grow a lot and grow earnings a lot to grow into that. And it's probably it needs to change its profit margin. Now, if the software becomes good enough to have full self-driving, obviously the price of that software is going to go up. So it's, let's say $12,000 as an add-on right now, approximately. When you buy a new car, the value of that software is going to go up dramatically when it gets to the point where it is safer than a human, and you do have the regulatory approvals to use it. Many people are going to pay way more than $12,000 for that. So what's the profit margin on that business? Well, software, it's very high profit margin. The marginal margin is 100%, right? There's zero cost for the next version that goes out. So when you get to a certain point, and if you've paid for the setup, each additional subscription that somebody's paying for is 100% profit, all drops to the bottom line. And so when you think about the valuation metrics, this is a bit of a challenge because where Tesla is today does not necessarily represent where it's going to be a year from now, 5 years from now, on both the revenue side, because of the products that are in the market that we talked about. You have the Megapacks as one example, growing into the utility business, which is an enormous business. That's something you could have significant revenue growth there. And on the margin side, and not even talking about Optimus yet, just on these things. So when you talk about the margin side and you talk about the full self-driving and they own that software, and they've also talked about licensing that software out to other companies. Now, that's a super profitable business as well because you're talking about licensing revenue. What'd you get? Software business, super high profit margin. So now the multiple that you put on this company maybe doesn't look quite as ridiculous when you talk about that the margins are going to increase significantly because you're going to have revenue drivers that have really high profit margins. So let's see. And you also have, again, an enormous business in the full self-driving, and you add in the Optimus. You're talking about an enormous total addressable market, TAM, if you like. And so those numbers become a little bit crazy. And so, but when you do those and you get any modest uptake in this, maybe the PE doesn't look quite so ridiculous, but it is challenging. You really have to think through and you really have to think ahead. Where can Tesla be in 3 years? Where can Tesla be in 5 years? And where can they really be in 10 years? I think you do have to think in these timelines. Tesla has grown. You're thinking, I think maybe, 18 years, Musk has been at this, 20 years, a decade. You really have to think about, okay, what the next decade look like for Tesla? And, if I'm paying 171 times forward PE right now, what am I getting for that? And, and obviously right now it's even more challenging because it's been up so much, right? People have this regret of like, oh, I should have bought last year when it was essentially half the price where it is right now. It's up, year over year, you're talking 95%, return. So it is a big return over the last year. Nonetheless, the margins is something you have to think about. The total addressable market is something you have to think about when you think about the valuation. And it is challenging, just like any business that has lots of growth. If you think about Amazon along the way, it always looked expensive. So this doesn't make it easy, but as an analyst, you have to really sit and think through, what are the, sort of optimistic view, what's sort of the base case, and maybe what is a case where they really don't make any of these things work or they make limited things work. And so you have to really think through that and decide for yourself. Now, on the balance sheet. So let's move on to the balance sheet for the company. This is a place where, maybe in the past they got some criticism, but right now you're really not concerned. You're talking about a really clean balance sheet. You have cash of $33 billion and total debt of $12 billion. So your net cash position, you're very comfortable with. And then if you look at cash from operations is $14 billion, and free cash flow right now is $3.6 billion. That's through September 30, 2024, and CapEx of closing in on $11 billion. And so as far as, and the interest coverage ratio, I think you're in the 50 times right now. So that's not something, 57 times. So the balance sheet, 57 times interest coverage ratio. Remember, that's EBIT, interest before interest and tax, over total interest expense. 57 times. Okay, we can sleep at night for that. Net cash, let's say approximately $20 billion in net cash, generating positive free cash flow. Again, we're not like so concerned. For a manufacturing business, this is quite good, right? Because you need to have a lot of capital deployed in a manufacturing business to build, these manufacturing centers in California, in Texas, in Germany, in China, very expensive. And so, these are good metrics for a manufacturing business, and certainly something on the balance sheet side that we should not be concerned about. But because the numbers are so big that you have to deploy in this business, this is something you also have to pay close attention to, because these numbers can change if you decide to take on a big new plant, right? If you're deciding to build a huge new manufacturing facility, those numbers can change, maybe not in an instant, but can certainly change more frequently than a smaller software-only business, as an example. And so the balance sheet, again, I would rate, we can sleep at night, and we'll get to scores here in a moment for all these pieces, but it's definitely not something we're concerned about. Again, EBIT over interest, which is the times interest earns ratio, the interest coverage ratio, 57 times, not concerned at the moment. But let's now go back through. On the business side, obviously, this is a tremendous business that people know about. Some people are really in love with. Other people think it's, way overpriced. As far as the business goes, something we have to pay attention to. They're in the car business for sure and selling cars. Now, they would say that they're selling really, autonomous robots that are not quite autonomous yet, but they're robots that have four wheels, that they have the software and the hardware in place, and the software is not quite there, but they'll get there, and they're upgrading both the hardware and the software, about to go to AI 5, and about to continue to increase the capability of the full self-driving that people purchase. You have over-the-air updates, just like a phone that helps drive out the new versions of that. So that's a big piece. You certainly have the mega pack business and in the solar business, which you're on the retail side, you have the power packs, but really the mega packs are the I think the real growth there. But certainly on the retail side, the power walls are popular and growing, and they're setting up virtual power plants, which we didn't really get into on that. But that is another I think hidden gem in the auto bidder software that's attached to that in the business. And so I think you have a lot of different ways that Tesla can really extract value and monetize some of these platforms. And again, growing into that utility business, and as things become more and more electrified, like the vehicle fleet that it's doing, also, it's going to be more and more important to have that. And they are really outstanding at doing this. And so I think that there's a lot of ways to think about the growth of the business and the products. And certainly the car business is a foundational piece right now, but they're certainly growing into other pieces. Again, the mega packs and the power business, the auto bidder software that's associated with that, because you need this software that works in real time to manage electricity. You can't store too much. Obviously, they're storing more now, but it really does need to be moved around quite frequently. The next piece, so I would give the business, I would say a 9. And then moving on to the management, I would also give a 9 to Musk right now. He's managing a lot of other things, so maybe that's why it's not a 10. On the valuation, this is where you could probably ding this, and I think you're looking at maybe a 6 or 7, trying to figure out, okay, is it worth paying 177 times forward? And then on the balance sheet side, I would also give it a 9. So, your composite score is, maybe 8.25, or depending on how you really want to rate it, but you're 8.5, depending on if you give up a little bit, but still very favorable. This is a small position at the GW Investment Institute, but it's something that I think everyone should be thinking about. This is a company that's doing very exciting things, very interesting things. Sometimes the CEO can be controversial. Certainly, given the new administration that it's in, we'll see how that plays out. People are interested into that. But I think it's worth paying attention to as an analyst. I think it's a company that you should absolutely be paying attention to for a variety of reasons, including the Optimus robot, the artificial intelligence that's associated with the full self-driving, and the Optimus. These are real-world applications for AI. So, it's exciting on a lot of different fronts. It's reshaping, helping to reshape the energy business as well on the electricity side. So, all that said, I think it's a company that as an analyst, you should be keeping track of. There's a lot of interesting things happening, and it's a consequential business that you should do your own work on. Well, that's it for this episode. Until next time, that's it for Market News with Rodney Lake. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.